All right, hey guys, Sam back with you here. Got some members that are trading in NEO, both against Bitcoin and the dollar. Asked for some technical updates on what's happening in there, and this is a really tricky coin to be trading here. Some tricky technicals here. There's some things to learn here. And sometimes it's a matter of experience and a bit of judgment in terms of how to count it. You know, one of the challenges of Elliott Wave is that there can be some subjectivity as to where the counts begin and end. There's an old joke that if you put 10 Ellioticians in a room, give them one chart, you'll end up with 10 different Elliott counts. And to some degree, you know, there's some truth to that. So it becomes a matter of, you know, there's no certainty, there's no absolute. We can work within this rule set, and as long as we stay within the rule set, then the goal of it is to look for reasonable risk-reward entries into the market, and to have realistic targets that are based off of patterns that have proven to repeat millions of times across every asset class. But you know, you can't be you know, dogmatic about it and say, well, I know the count, I have the count, and it will follow the way I'm projecting that I see it. You've got to adapt to what the market is doing. And while we're seeing just remarkable technical trading in crypto, I mean, it surprises me still, you know, how technical we are here in crypto in what is a relatively new asset class. But I'll be damned if it isn't as technical as any asset I've ever seen. So, you know, all of that said, you have to adapt to what the market is showing you, and you have to try and stay within the Elliott rule set the best that you can, and then ultimately look for those opportunities where you can get into the market and know where, if you think you've got a count that works and that meets the criteria that dictates the structure of an Elliott count, that you know where you're wrong. And then that's where you're out of the market. You know, and again, that's a function of, if I'm wrong, can I afford to be wrong? So is the move from where I'm entering to where I know my count is going to be invalidated? Can I handle that kind of risk, or is that too much? Or do I have to reduce my size of my trade to be able to accommodate that kind of movement in the market and sustain the Elliott count that you think you see? So you've got to just be flexible with it. So here's the count that I see here, and we can see that there's good technical evidence to support this. But you know, this could be relabeled, you know, 5 times if we're going to continue to move higher. Right now, as I see it, we are completing a 5-wave sequence to complete a 3rd wave here. Now, so I've got the 1 hour. So if we step back, if we go out to the 4 hour to give it some perspective, this has been, you know, difficult trading, right? So there's been a lot of 3s and 5s taking it all the way down here. Let me go out even further so you get a sense of perspective. Let's go to the 8 hour and look at this. So there you can see where we've been, right? And you can see we had a you know, whether this was 1, 2, and this is 3, 4, 5. We had an Elliott count that completes here. And then we've gone into a very deep correction to correct all of this move from from when NEO was down, you know, close to 0 when it first started trading. So we could go all the way back to the lowest low and say, okay, well, there was some sort of 5, 1, 2, 3, 4, 5, we complete. And then we can see we do get this ABC, and not to belabor the past here, but we can see right to the 50, and then we're a little shy of the algo target, but it was technical. Pivots from high to low, we go right to the 50, and then we get a 5-wave sequence. Again, we get an ABC showing that the trend, remember we trend in 5s, we correct in 3s. So we get the first one, that's just classic algo trading. It's, you know, front run at the 50, and then if we go to the second one, we go from here to where we go here to that low. Here's the 50. We get a little through it, but we stay within the 50 and the 618, and we come down, and that one hits the target. So sometimes you don't get the big one, but they end up getting the second one, and that ends up being our pivot and completes this ABC. So correction over, we start a new trend. So let me pull that off. And now it's trying to get a handle on where are we in this trend. If I'm going back up to challenge those highs, well, you know, I'm just getting rolling, and if I'm going to complete a 5th here, If indeed, so if I open this up and you get it, this will be easier as I open it up. But you can see in white here of 3, 4, 5, that could very well just be the one wave. We through all of what I'm about to show you, this could simply be the one wave of a 1, 2, 3, 4, 5 going higher to challenge and go beyond these prior highs. So you need to have some perspective on it. And sometimes, you bring up a chart, you look at the hourly, and you lose perspective on where you've been and where you're trying to go, at least as relates to prior swing highs, prior places where it's traded. Can we get up there? If we're going to get up there, if we're going to trend in a 5-wave sequence, this could very well be just the one wave. Because if we're going to top out here for a 5, which would be consistent with the structure and the structure relative to the symmetry you'd expect in an Elliott count. Unlikely that the 5th is going to be up here relative to this being our 3, 4, which is what I'm proposing. So this very well could just be the one wave getting started here as we start a new trend. If we're going to go to and through these highs, my guess is we're just putting in the one wave of the larger degree here. So let's go down, open it up, and say, okay, well that's all fine and well, Sam. So how the hell am I going to trade this? So let's look at this here and get some context. So from that pivot low, it's, this is a judgment call here. So I see it. I see we've got a 1, 2, 3. I don't love the structure here of the length of the 1 and the 2 relative to the 4, but it's technically valid. I don't love it. I mean, it's possible that we've got a 1, 2, 1, 2. But because this 3 here goes right to the high probability zone for a third, I think this plays as a completed 5 wave. So again, this is back to where I started. Two different Elliotticians might come with 2 different counts there, or 5 different Elliotticians are going to come up with 5 different counts. The way I see it, this is a significant pivot to me, and it stays within this context of the median lines that I see here. I don't quite make the upper parallel, but the action and the reaction as the market moves forward implies to me, look, here's a perfect wick of the median line, that if nothing else, these 3 pivots are significant, and the market is responding to those. And you can see as we continue to move, it continues to influence the market, even as we've gone all the way up here and done almost a perfect wick here at the negative 100, and we're going to get to that. But what I see is a 1, 2. So I've got a 1, 2, which means I'm expecting a third. And I'm expecting that third to be rather substantial. So if we look at the largest degree here, so here's my 1, 2, 3. So a gigantic 3. Within that 3, because that's a third, it needs to be impulsive. So I can't have a diagonal within my third wave. So if I break this apart now, and this is my 1, 2, does it stay technical? Can I maintain my Elliott rule set as the market moves and unfolds here? Well, let me take this off just so you can see it a little bit better. 1, 2. Okay, now first I'm going to expect that I'm going to move off of that. If that's a 2, then I'm going to move off of that impulsively, and I'm going to look for subdivision. So here's my first 1, 2 of my third, right, of my larger third. So 1, 2. Then I get, again, just beautiful subdivision here to complete my third. So if I measure that out and say, okay, well, does that make sense as a third? So if this is my 1, now this is hot here. So here's my 1, there's my 2. Okay, so we've gone beyond the 2, 6, 1, 8. Well, okay, so when you see that, I mean, so one choice is you could go to your fib tools, and let me bring that up, and you could add, you could go beyond the 2, 6, 1, 8. We could go to the 300. You could start experimenting with it. There's the 300. We could go to the 3, 6, 1, 8 if I've got it up here. Let's go to the 3, 6, 1, 8. Where are we? Okay, let's look at that. Okay, now that now we're getting a little closer. So, we're kind of in between. But from this 1, 2, look here. So I get a third here. So let me pull that off and say, okay, well now within my subdivision, I'm getting further subdivision. So even though this has gone very hot, look, within that third, I get subdivision. So I start measuring again. And, this is just the work you've got to do to try and get a handle on what could the count likely be. Well, now look at that. So now if I bring this, if I go to my crosshair here, you can see my third hits the 2618 to the tick. Here's the 1618 to the tick. So this starts to add to my hypothesis, if you will, that I've got a 1-2-1-2 because I'm ticking off my high probability zones with absolute precision. So I get a 1-2-1-2. Here's the first 618. I get the third to complete here to the tick at the 2618. So I can look at that and say, well, that's high probability for a third. So I'm getting a 1-2. 1, 2, 3, 4. Now let's measure that. So, again, it's this process of trying to identify the pivots that the market is responding to. That's all you can do. So if that's my 2 and that's my 3, what am I expecting for my 4? Well, I'm expecting my 4 to be in the highest probability zone, which is between the 38 and the 50, and that's right where we go. And we hover around the median line. So this adds credibility to that idea that I've got a 4-5 going in. Okay, so that plays. We don't quite make the algo target before we get this correction. But look where that correction goes, right to the 38.2. So now I look again, and I go, okay, well, if I've completed here, does that make sense? Well, if that's my completed third, now I got to look back to my second of the next degree. Okay, do you see what I'm doing here? So I've got 1, 2. Now I complete a 5-wave subdivision into what I propose is my third. I come down for an A, right to the lower parallel. So it's technical. There's my 3-wave B to tell me that I've got a corrective wave here. Right to the median line. Then we come down. Now here's the trademark crypto correction, shallow C. Shallow C. So I see this. So I see an ABC into a larger, so actually it would be over here, my mistake. So it would actually be ABC into an A, up into a 3-wave B, wick the median line. Now this is where, again, this is, again, 5 different Ellioticians might count that differently. But it makes sense to me. So I get an expanded flat here. So here's my third. My fifth is going beyond the end of my third, meaning I've got an expanded flat. So flat being, look at where the B and the C. All right, so I get a flat, but I get the expansion in the B wave. Not uncommon. So I get an ABC into my A wave, I get an ABC into my B wave, and then I get a 5-wave sequence down here, and we double bottom here into a C wave. So A, B, C into the fourth. Where am I looking for the fourth? Right at the 38.2, and I'm right here within a few ticks of my lower parallel, the 200% of this median line that I've drawn from all the way back here, still influencing the market here. Perfect double bottom here. So really, we've got 1, 2, 3 times we tag that level. So I propose that's my fourth. Okay, so because I know that an expanded flat is not uncommon, and because we come up and wick the median line, Andrew's median line principle number 2 is that markets will often pivot at or right near the median line. Boom, reaction down. So if that's my 4, well, then I'm expecting a 5-wave subdivision into my fifth to complete in blue here. 1, 2, 3, expanded flat into my 4. I go up for the 5. Right? So you've got to work through all of that to qualify those pivots, so that you know when the market comes down here, could this be my fourth? Or did I do 3, 4, 5? Does that make sense? Well, that wouldn't make sense, because look at this. If this was my 5 up here, right, which might be how someone who was just learning Elliott wave. So you might think, oh, well, 5 has to be higher than the 3. So you might think, oh, well, that's a 5. Well, if that were my 5, well, then I'd be looking for a 2 wave. So I'd have to be going all the way back to the beginning here. Now I've got a 2 wave. So if that completes here, if this were my fifth of a 1, 2, 3, 4, 5. Well, now I've got a 2 wave at the 382, but I know the high probability zone for a second wave is between the 50 and the 618 and can be as deep as the 786. So it doesn't play as well. It doesn't look as good to me, and because I know that an expanded flat is something that we commonly see, I can put that and say, nope, it's not done yet. Here's my completed fifth. At least that's what I propose. That's how I see it. That's how I've been trading it. Right? As to whether or not it ends up that way, well, time will tell. Time will tell if indeed this is the fifth of the third. Right? I could be wrong. I'm not saying that I'm not right, that I couldn't be wrong. I'm saying this, as I qualify through these waves, this is what I see. And, you know, I would encourage you, if you're going to apply this kind of methodology, that you take the time to qualify your pivots. Does this make sense? Well, if this is my 4, which I propose that it is because it's a higher probability zone for a 4th here than a 2nd, then I'm going to expect a 5-wave sequence to complete my 5th. Now, I'm keeping the same median lines on this all the way. It's been very consistent. It's contained the entire move. Well, what do I get here? 1, 2, 3, 4, up for my 5. Now, I'm hitting. So, look here. So, I'm pulling from my 1, 2. I'm pulling from, pardon me, I've got this because I just moved it. So, here's my 2. Here's the pull I want to make. That's my 2. In blue, from 1, 2, 3 to my 4, right up to my 5th here. So we go all the way to the negative 100% from this 38. Right, here's the first algo target, second algo target. They get all the way to the 3rd, which is very close to my upper parallel. So this makes sense to me. This plays. This is how I see it. Others might disagree with me, but I think all that's happening now. So why does that matter? Well, if this is my 3rd, now I'm drawing for the 4th. Right. So if I thought this was, you know, if I had completed the 5th here and this was my 1, 2, well then I'm you know, it's a different draw. I'm looking for different probability zones. So now, given that I propose that we have a completed 3rd here, and it, you know, we can't be absolute about that yet because this could keep going. But as I look at this, the next opportunity, I've got a 1, I've got a 2, so I'm pulling from here all the way to my 3rd. Looking for my 4th, and it wouldn't surprise me at all that we stay consistent with these median lines. Where's my probability zone for my 4th? Between the 38 and the 50. So anywhere in this zone here, I'm looking for a 3-wave subdivision to bring me down to my 4th. So I want to see an A, B, C. I want to see an A. Would love to see an A right to the median line into a A, B, C. You know, depending on how and where we get there, you know, I might have to add the 300% depending on how much time it takes. That's another advantage of median lines is that I get this time component here. So when I can see that I've got an A wave in, and then I go up to challenge the highs, it fails as a B wave. If I come down here for the C. You know, I mean, a 4th can be as shallow as 25 to 38%. That's not uncommon in a strong market. But now I'm waiting for subdivision here. So I don't jump at the first tap of the median line. I don't jump at that because I'm expecting, given the subdivision that I've had along the way, I'm expecting that subdivision into my 4th. I would be surprised if I didn't. Now, one thing that, again, as we've seen here repeatedly, this shallow C wave wouldn't surprise me. So I might see something like that. Let me put the wave on it just so you get the idea. So this, we've seen this a lot. So if I'm going to come down here or go deep for my A wave up to my B, that's we see it all the time. Now, could that play? Well, yeah, 4th wave can be a 23.6 in a very strong market. That's you know, we see it a lot. But the highest probability zone is down here between the 38 and the 50. So I get a little structural support both here and I get a little bit here. So if I can come down here, I've got prior resistance potentially to offer me some support. So that's where I'm looking for the next opportunity, but I'm certainly conscious of the fact that we could see that truncated C again as we see here, we see it all over in crypto where we see these shallow C waves. You know, but this is what I'd like to see. I'd love it here. I love it here. But I know that I can see that. So you kind of wait and watch, and you look for 5 waves into that C to know that it's complete. All right, I'm running long here. That's 18 minutes. Okay, I'm going to wrap this, and I'll do it against the dollar because that's equally as complex, and this video will just be too long. So I'll wrap it here on Bitcoin. Be back to you with a separate video with NEO to the dollar. Okay, guys.